Welcome to XM Live. 5 XM hosts are live 5 days a week to bring you exclusive educational shows, live interviews with expert traders, and much more.
All right. Well, let's begin from what happened yesterday to update also our viewers and our traders.
Learn all about XM products and services, and get answers to your questions in real time.
Some viewers, who are just starting their trading here for you guys, I'm going to ask those questions.
Tune in from Monday to Friday for 9 hours of XM Live.
Calling all traders. Do you want to improve your trading skills? We can teach you how to automate your technical analysis. Then make sure you join XM Live Education. The Tradepedia experts are here to share their knowledge with you in brand new sessions. On how to use exclusive technical indicators, you will learn how to use the following: moving average ribbon, Ichimoku Kinko Hio strategy, ADX and PSAR strategy, Bollinger Bands, Avramis River, combining indicators. Created by Avramis Despotis. Tune in every Wednesday at 2 p.m. GMT in XM's Advanced Room. Take your trading to the next level.
Smart traders never miss a beat. Keep your finger on the pulse of global markets with the all-new trading app from XM. Enjoy access to over 1,000 instruments, including Forex and CFDs on stocks, indices, metals, and energies. Place trades on the go with a single tap and benefit from instant order execution and no requotes. Take your trading to the next level with advanced charts and trading tools, and stay informed about the latest market movements with our expert news and analysis. Create, validate, and manage your account, and make deposits or withdrawals all in-app. Who says you can't have it all? Download the all-new XM app now.
Here you have access to dozens of educational sessions that will elevate your trading skills and increase your trading knowledge. Get ready for an exclusive live trading session by our trading experts and tune in every day from 7 a.m. to 4 p.m. GMT to keep learning about trading with us. Enjoy the show.
Hello everyone, and welcome here to this very special panel discussion about the Bank of Japan interest rate decision that we will have tomorrow. My name is Gil and I have two experts here with me to discuss what will be the implication of tomorrow's decision of the Bank of Japan, how can we trade that, and what kind of benefits can you take of this. So I would like to introduce my experts here. Dzhuneyt, Hello, how are you doing?
Hello, Gil. Doing great. Thank you very much. And how are you?
I am fine as well. And then on the other side, we have Krunal for the first time here in a panel discussion. Krunal, how are you doing?
Hello, everyone. Hi, Gil. I'm doing very well. How are you?
I'm also good. So tomorrow, I think, look, it can be, of course, a very normal event tomorrow. Like the last 7 years, nothing is happening with the Bank of Japan. Like the last time something changed in the Bank of Japan, it was like in 2016. So this is like 7+ years already, 7.5 years. And the last time they raised interest rates, it was in 2006. So this is like really a long time. And there are a lot of rumors that tomorrow a historic event could happen. And so I would like directly to ask you experts, what do you expect tomorrow? Do you see some change? In which direction, of course, and why? And if not tomorrow, when could we see that? So I would start maybe with Dzhuneyt. What do you think? What will happen tomorrow?
Thank you for the great question, Gil. That's probably a tough panel discussion. Actually, a lot of uncertainties here. Just want to let our viewers know that whatever I say, it's with huge uncertainty. I'm not very confident, but I have something that I'm keeping an eye. For the rate hikes, I'm surprised that the market huge, let's not say market, but most economists are expecting rate hike this tomorrow. And very less, let's say, expectations from economists. You're going to see that it's moving to April. I'm like, wow. And that happened because of the wage growth recently, which is not very strong one, but still shows some moderate growth due to inflation expectations for 2024 and moderate growth in the economy. The thing is that not attracting me so much for tomorrow's rate hike is that the bank doesn't expect 2025, the long-term inflation expectations not very high, which is okay. They might try to get rid from the negative interest rates and just to go around zero or something a little higher and not jump into rate hike cycle. So I am not expecting a rate hike tomorrow. My forecast for Bank of Japan became hawkish was beginning of 2023. Well, that didn't happen. Obviously, I still expect it, but I somehow think that they will wait a little bit more. Maybe they would like to see what the US will do. They would like to see what other central banks will do this week. They are not going to rush. And I don't think that they will announce when they will do anything. They didn't share anything about the rate hike. And I believe they won't. They will do some Swiss National Bank style rate hike without saying, hey, we're going to increase interest rates on April, we'll be ready. I don't think this is going to happen. Is there any probability that they increase interest rates tomorrow? I will give because I don't believe in 100% things on the financial markets and economy. So yeah, could be because huge part of the economists and big names are expecting it. I will detach from them. I will say I'm not expecting a rate hike this time. And my original expectations were second half of the year, not even April. So second half of this year was my expectation. But maybe because of that wage growth, maybe because of some economic data change, I can say, okay, let's fall in a trap of expecting it to happen a bit earlier. But definitely, I don't expect that to happen on March meeting tomorrow.
Okay. So before I continue and directly ask also Krunal the same question, of course, I would like to welcome all the viewers from all the social networks. XM is a portal where we are streaming live on 3 different channels every single trading day from Monday to Friday, from 8 hours per day. So you are invited to join us there. It's absolutely free. You can be on the website. You can ask questions. So you can ask questions also, of course, on the website from XM, where you have chat possibilities. But even if you are on YouTube or Facebook, you can ask questions to the experts. I will forward it to them, and hopefully you will get benefits out of it. We will definitely talk also, about trading opportunities, because we are traders in the end, and we want to know what to do with all the information that we are getting here. So now I come back to you, Krunal. What do you expect tomorrow?
So I'm a bit of a fence sitter at this point, because on the one hand, we have all the expectation and everyone's waiting with bated breath to see what the decision is. And if we look at the sentiments of traders and if we look at the analysts' expectations, it seems that everyone is just looking at a hike. And to me, that seems a little odd, because whenever everyone is looking at a certain direction, I feel it's time where you really need to consider the other side. So while I do feel that certain data does indicate that, hey, there's a very strong likelihood that the BoJ might hike the interest rates, I do feel that people are almost ignoring the possibility that nothing might happen. Because if we consider the past data, the BoJ hasn't exactly been very dynamic when it comes to their monetary policy. So I'm not really sure if the expectations that we might just magically see a rate hike are in the right place. But then again, crazier things have happened. So I do feel that certain data, for instance, if we look at business confidence, yes, that does indicate that, hey, there is some sort of room for a rate hike. But then it might just be too early to call it, because we're just seeing a couple of upticks now. It might not nearly be enough data to really make such an important, almost a landmark decision like hiking rates.
Yeah, on one side, it's a landmark decision, right? Because it's the first time hiking after more than a decade. On the second side, it might be only 0.1%. What's the matter? It's 0.1% from minus 0.1 to 0. So that's, it could be a possibility. So I would like to ask you both, now maybe Krunal, I start first with you. What do you expect? Because you said, okay, sentiments are strong. Actually, when I look on the US dollar, Japanese yen, we are on the weakest level. So even though everybody talks about it, the Japanese yen didn't get stronger, which you could expect if everybody bets on it, right? But that it didn't happen. The opposite is true. The last couple of days, it gets again even weaker. So what would you expect in either direction? So let's say maybe first, what market moves do you expect if they hike rates tomorrow?
So I think since everyone is waiting for that rate hike, I feel that's where the market movements might be a little volatile or might just catch people off guard. Because on the one hand, you've got all of these traders already set with expectations that, hey, there's a very good likelihood that the rates might hike. And to me, that signals that, okay, maybe there's a very strong possibility that the expectations are set in that way. So I don't feel that we might see a very noticeable or a sustained move in that case initially, at least something that, along the lines of the expectations that some people might have, since it sort of directly contradicts how the markets end up working, that, hey, if the expectations are not fulfilled or if we see something contrary to expectations, then that's where the larger move comes. So let's say rates are hiked tomorrow. In that case, I do expect the currency values to, let's say, fall. But in that case, I don't see a very large move in that case, perhaps initially, and then the sentiments might just sort of balance, the market forces might come into the picture. But where I do see a larger move coming into play is if there is no rate hike, because everyone's sort of almost counting on that rate hike, and if that just does not happen, hey, what do we do? That takes the market by surprise, and I do feel that might actually cause a larger impact. Again, all of this is pure speculation at this stage. We're just trying to piece together how the market might move. Ultimately, the market's going to do what the market's going to do. So, yeah.
Do you trade events like that?
So my philosophy when it comes to trading, especially important events like these, is to just wait and watch. Typically there's a lot of noise around the event. So, to me, it becomes, hey, are you trying to sort of take a trade with a hope and a prayer, or are you trying to take a trade with price action with a good solid analysis behind it? So to me, waiting until after the event has passed, maybe a couple of hours, maybe longer, depending on how the price action is shaping up, makes more sense. But yeah, again, that's just how I work. I'm sure some people like that uncertainty or like that skewed risk reward that you typically get with these larger events.
How is it with you, Dzhuneyt? Do you trade stuff like that? Will you be awake during the night?
I will be checking and really laser focus watching and analyzing, but I don't trade interest rates for very, very long time. Maybe a decade, maybe. I do follow interest rates. I trade interest rates reactively. I trade data releases proactively, which like CPIs, like all type of CPIs, NFPs, and so. But for interest rate decision, due to the unexpected volatility from couple of things, rate hike decision, statement, and Q&As are always increasing emotions in different ways, and every answer for different question might be translated differently from the market. That's why I also prefer to wait for the news. And you know that I'm a bit aggressive trader. I might try to be in the trade before the events, not just before the events, day before the events. And if the price action goes in my favor, I'd like to be secured by securing my trade with stop losses and so. So if things goes as expected, I'll be very happy to make a huge trade, good trade. If not, then I'll just get rid and I'm not going to trade during the event. What's going to be the direction on the markets? I'll share a bit bold statement. As I said in the beginning of the session, whatever I say, it's coming with huge percent of uncertainty. I'm just going to share it in terms of my arguments that I have. And if it happens, I expect dollar Japanese yen to drop significantly if they do a 0.10% rate hike, or they even just give a hint that they will do. Let's discuss first if they do a rate hike, any type of rate hike, if it's going to be 0.10%, which is also my case for the next whatever that happens, it's not going to be big rate hike. So that to bring dollar Japanese yen significantly down. We are talking about Bank of Japan, but we should not forget Fed here. Expectations for Fed to cut rates are also high, even though it's decreasing significantly. I have my expectations that Fed will 100% cut rates this year. It's not going to be as the market expected 5 times, and so I even don't think it's going to be 3 times. My case is that they will do 2 times, but it's getting into the rate hike cycle, rate cut cycle. So it is going to bring dollar significantly down, and expectations that Bank of Japan will increase interest rates, or they increase interest rates right now, will significantly hit dollar Japanese yen for a downside. I'm very bearish on dollar Japanese yen if Bank of Japan increases interest rates, not only because Bank of Japan. Let's say that they don't increase interest rates. What is going to be the initial reaction? Okay.
Dzhuneyt, just I want to clarify for the viewer. When Dzhuneyt says that he expected US dollar Japanese yen goes down, that means actually the Japanese yen gets stronger because we trade US dollar go down against Japanese yen. I just want to clarify that all the viewers understand that.
I just got a little luck here. Sorry, I missed what Gil mentioned, but I hear that you clarify my statement, Gil, right?
I just said that when you say that you're short US dollar Japanese yen, you're actually long for the Japanese yen,
yes,
short
bullish
for the
on
US
Japanese
dollar.
yen, bearish for US dollar, exactly. And
Yes.
let's say Bank of Japan not increases interest rates tomorrow, I will expect sharp move to the upside, naturally weakening dollar Japanese yen going up, or weak Japanese yen. But then I believe that bearish trend will restart the moment when the other events start happening. They will postpone Bank of Japan rate hike expectations, and which is going to probably align with Fed easing, or at least giving a hint for easing even more. But generally speaking, this year I am dollar Japanese and bear. If it's going to happen from now, or it's first we're going to have higher high and then it's going to drop, will depends on tomorrow's event.
Just an additional question. So we are at the moment, we have 149. We have a very strong resistance between 150, 151. Do you think if they don't hike, it will break those strong resistance above 151?
I think it's going to test the waters there, like 151 to 152. It's quite possible if they don't.
Okay. Now,
and that's going to complete one technical cycle that I'm keeping an eye, and I will be even more hyped to prepare for a short from the higher levels.
So you continue to stay on the short side there?
Yeah, but if they don't increase and I see good technical reason to short-term buy as a trader trading both short and long-term, I will try to ride it. But I will know that it's a risky play, so I will do my, I put strong risk management there.
Krunal, we got a question from YouTube, I think, and somebody is asking you if you think that gold could be affected by the move tomorrow on the Bank of Japan decision, and in which direction, of course. What's your opinion here?
So here I feel the primary impact on gold might just be due to the uncertainty factor. I don't think that the impact of Japan's monetary policy is going to have any significant, or at least statistically significant, bearing on gold prices. But I do feel that it might affect it in terms of sentiments. Again, I do feel what Dzhuneyt said about the dollar being impacted by the Fed might have more to do with how gold ends up moving. So in general, if we talk about gold, not just for tomorrow, but let's say for the coming year ahead, I do feel that there is quite a lot of uncertainty remaining still. And that might just lead to gold having some sort of a bullish bias. Again, at this stage, we're just about, hovering around that 2100 plus level for gold. We're looking at it sort of correcting from that overbought status that we saw with gold. I feel that that might just stabilize around that level. I don't think that it might end up falling the way a lot of people feel it would. Because I think a very common sentiment among people is that, hey, if it's gone up too fast, it's going to come down even faster. I don't think that always holds true in the market. So overall, I do feel that gold might remain buoyant, at least stable around that level. I don't see this particular event impacting gold prices a lot. Again, they might move because of sentiments, but I guess we'll have to wait for the price action to unfold.
What's your take here, Dzhuneyt?
Gold mostly driven by U.S. decisions, but I would say that Bank of Japan, it's one of the largest, and if not the largest, foreign investor in the world. And if they do changes, absolutely everything will move. Absolutely everything will get significantly affected, because if Bank of Japan decides to increase interest rates, this is going to bring a lot capitals back home. And don't forget that the second central bank of USA is Japan. There are huge investor in USA. If they decide to bring capital home back, this is going to have huge impact on US stocks, on currencies, on commodities, many commodities. And I do believe that if they decide to change monetary policy, then we're going to see also gold getting hit from Japan, but in a positive way. I guess it's going to be more bullish than bearish. Yeah, so I believe it's gonna if they don't change monetary policy, I don't expect gold to react to that significantly.
Okay, so before I continue, because I would like also to ask you about what do you think about the effects of the Nikkei, and I want also to talk a little bit broader about the yen in general, because this was the ultimate carry trade for the last decade, and if any change happens, that definitely could change significantly stuff. But before we start to talk about this, I would like to make a small break of a couple of seconds, and we turn back. Just wait.
Looking
Looking to enjoy free unlimited access to live education? Learn how to trade alongside our trading experts 5 days a week, 9 hours a day, simply by registering an account here with us. Start trading in a couple of minutes.
Hello traders and welcome back. I want directly to continue because we have a lot of information and a lot of topics to talk about. So Krunal, it's not only about the Japanese yen, right? We have just recently seen that the Nikkei made a new all-time high after, I think, around 30 years. So we had an all-time high in the 90s. And just recently, it made a new all-time high. The Nikkei is flying. What would happen if they would raise interest rates? Would this be stopped, the raise in the Nikkei? Or do you think there is no correlation and we will see the continuation of the uptrend?
So saying that there's no correlation or even implying as much would be a bit of a bold statement. So I'd refrain from saying that. But definitely, if the rates are hiked, then I feel we might see some sort of a test on the downside to really see how much sort of fluff there is in the market at this stage. Though I do believe at this stage it might just continue remaining bullish. Because if we also look at foreign investment in Japanese equity, in bonds as well, that has steadily increased. And of course, as we know, foreign participants in the markets are likely to bring in big numbers, big cash, and that might actually be helping Nikkei stay afloat. So I do feel that there is still, room for that bullish path ahead. Though again, of course, it's always 50-50 with these things, again, because it depends a lot on how the investors change their expectations, how markets change at that time.
Do you trade normally the Nikkei, or isn't this your area of?
No, not necessarily. I don't really trade the Nikkei.
I understand. Dzhuneyt, how is it with you? What would be the effect of the Nikkei?
Luckily, I'm in the position and I managed to catch that nice rally recently on Nikkei. I believe in both cases, Nikkei will remain bullish. Of course, it's going to have some reaction, natural reaction of the rate hike, and it could have some pullback. But if we think about what drives the market, we're going to just get that question answered. I believe that what drives the market, not I believe, it's actually a fact, it's money, okay? It's liquidity. It doesn't matter what's are the news. If there is no liquidity flow to the markets, they are not going to go up. It doesn't matter what's are the news. If there is a huge liquidity flow to the markets, they will go up. So they care about if there will be a high liquidity that comes to the financial system and the markets, and or not. Well, if we think about rate hike, which usually people are connecting it with the bearish stock market because borrowing cost rises, people will struggle, leverage exposures are going to get hit. In this case, I will say that if Bank of Japan increases interest rates, I will take my expectations that they are not going to go into the rate hike cycle. They will do once, maximum twice rate hike, in my opinion. It's just going to be a little bit to get rid from the negative interest rates environment, which is going to bring huge capital flow back to home. The carry traders will get hit, as you said in the beginning, because dollar will go down due to rate cut expectations, and probably they will do. I have strong arguments for that to believe. So this is going to increase the liquidity in the financial system in Japan, and I guess it's going to be more bullish than bearish, but I'm not excluding a nice drop and pullback on the Japanese stocks as an initial reaction. Of course, it's very important to note, I say one or twice, not significant rate hike cycle, which I don't expect, but you never know. There is a huge debt in the system covered by the massive reserves on Bank of Japan. We need to take into consideration also this. And hedgers in the Japan that are buying foreign investments, they also like to hedge their currencies by buying currency hedge bonds, which are super attractive in Japan. And if they go for one rate hike, it's going to make them even more attractive. And I expect huge capital flow back home, and this is going to be bullish for the markets. I'm not expecting Nikkei to drop, to change its trend.
But couldn't it be that because you also said that you expect that the Japanese yen will increase in value, that this would hurt the exports of Japanese companies and the profitability of Japanese companies?
Well, what I'm yes, this is a very interesting topic. I think in the long run, it could be, but in the short term, it's always hype what drives the market. We have a lot of companies that are just moving up because of the hype of the current events. In USA, we have a lot of companies that are not making huge profits, even they are in a big losses. They are still going up because of the macro events and some hype behind them. I guess that's what's going to happen in Japan initially. I expect Nikkei to go up with a huge value and great, even it can make a little pullback. Then in the longer run, this bad, if there is a bad profitability of the companies, then we're going to get maybe hit on the stock market. But right now, even for 1 year from now, I don't expect this to happen.
Okay.
Maybe even 2 years.
What about you, Krunal? Do you think that an increase in the value of the Japanese yen could hurt the profitability of Japanese companies?
So I think the profitability of the companies might hinge upon other factors as well, of course, as we know, because wages have been going up, employment is up. So I think those factors might be initial drivers for profitability, and that in turn might affect the sentiments of the market as a whole. So here we're talking about the Nikkei to see where it moves, whether it's able to breach that 40K mark and such. I think those factors initially might have a greater bearing on the Nikkei than just currency values at this stage. Business confidence overall has been strong, so I do feel that as Dzhuneyt as well said, that at least for a year or so the Nikkei should be bullish, or at least could be bullish if I can correct myself. When it comes to currency values and their impact on other markets and other asset classes, I do believe that the correlations or the movements in tandem with other asset classes tend to be a little overstated at times, because people feel that, hey, if this is moving a certain way, then this also has to move a certain way. I don't think that's how the markets typically work. Usually, over a long term, we might see a correlation, and over that longer term, perhaps the values might drop, perhaps they won't. Again, it all hinges on a possibility. So I'd say that there are immediate factors at play here with regards to the profitability, and of course the liquidity, as Dzhuneyt as well discussed, and the foreign flows and the domestic flows as well. So I do believe those are more pertinent factors at this stage rather than exchange values by themselves.
Okay, so I will continue a follow-up question here, and I said the Japanese yen in the last decade was the ultimate carry trade, because it's negative interest rate, so you can borrow in Japanese yen. And I know, for example, in Europe, they were quite used to take even mortgages in Japanese yen. So if they start to raise rates, what could be the spillover effects on global markets? Do you think there will be, or it's nothing?
So I do feel there is going to be a considerable impact. If anything, it's a very symbolic event as well. If the rates are hiked, or whenever they are hiked and they're non-zero, non-negative, I do feel that it's a very big thing, and it might end up impacting the global markets. Though their exact precise impact is a little difficult to gauge. When we talk about a whole host of other financial instruments, it's very difficult to pinpoint and say that, hey, this is the exact movement that we could attribute to these non-negative rates or a rate hike. So in that case, though, I do believe we would have to look at sentiments at that stage. Again, since it's a symbolic gesture, and we would also have to consider whether it's something that the BoJ might continue to do. So as Dzhuneyt said, if it's just a one-time thing or a two-time thing, then perhaps we're not really looking at a regime change or a structural change in the ecosystem. But if it's going to be a sustained thing, then perhaps the markets would have to adapt accordingly, and then perhaps we'll see a very, very, very different spillover impact on the global instruments.
Okay, thank you. Dzhuneyt, what about you? Do you think there will be spillover effects?
I do think that there will be a spillover effect. As I said, Bank of Japan is the largest asset holder in the world, foreign asset holder in the world, together with China. Even often it's the largest. Whatever they do, major changes will impact absolutely, as I said in the beginning of the session or in the middle of the session, that they will have a spillover effect, will affect absolutely everything. The question is in what rate, like some of them will get significant impact, others not so much. If rate hike in Japan means risk off also for USA, I expect in US they managed to handle that situation, and the stock market also, after some reaction, to continue upside, but I'm not sure for USA. Need to really check what they will decide to do, because one rate hike means a lot of things, but supported with the statement what they plan to do in the future could mean completely different thing. So need to keep an eye on all the scenarios and what they will bring on the table. As I said, I don't believe they will increase interest rates right now, but very important to know what they plan to do. I'm not sure that they will share anything for their planning. They are central bank in the situation, like they can't share anything what they will do. They can just give a hint that at some point it could be, but they also say that you never know when. We are not gonna do that when we have interest rate decision necessarily. We can do it any other day. So if they can do it any other day, I'm not sure that they will do it while everybody is expecting it. So we will see, but definitely I expect that there will be a spillover effect. Huge movements for traders, not so great for investors.
So in general, what's your advice as an investor, protecting yourself, and as a trader looking for opportunities?
As my portfolio is more focused on US and developing markets, emerging markets, I'm not so much looking for directions on the market, but the yields that I'm getting, the dividend portfolio that I'm building, it's pretty much resilient. I'll say pretty much safe for those volatilities. Just I'm more worried as a trader how that's going to happen. My suggestion to as a long-term portfolio is focus on a stable, profitable companies that are paying high dividends, that being going through all these different crises back in the history. And don't forget about how strong the energy sector is for the next decade. It's super undervalued compared to anything else. And it's just starting, in my opinion. And that's why I suggest be careful. Again, I cannot give advices here. Don't take anything what I'm saying as an advice to position yourself. But that's what I'm doing. And be careful with the high volatility. But if you are an investor, you should not pay attention for that short-term volatility, and you should focus on your long-term views, as I am huge energy fan for the next decade. And that's going to be the major part of my portfolio investment. Of course, I have developed other part like a barbell approach on the portfolio to get a huge risk to reward from expected massive growth on some of the assets due to massive printing money that is going in the USA right now. And yeah, it's going to be really interesting. Just I say there will be huge volatility. Be careful, protect yourself. If you know how, we don't have much time probably to share a lot of strategies here. We can do it on the sessions on the XM Live, both beginners and advanced rooms, but I'm not necessarily scared from Bank of Japan rate hike. I guess that I'm prepared for it.
How is it with you, Krunal? You are also a swing trader. Do you have positions open, and will you protect them overnight? Will you be awake, or will you just easily wake up tomorrow morning and then look for the opportunities?
So the latter, because I don't have any trades open, I don't have any positions open. As I shared, I'm more of a relax and trade type of guy. So I like to keep my positions very light, especially when it comes to extremely important events. Because again, as I said, I find that there ends up being a lot of noise and a lot of choppiness, and I'd rather wait through that phase, and then once the price action stabilizes, I'd much rather trade at that point rather than taking on the additional risk. Of course, there is the chance of the additional reward, but it just doesn't fit very well with my risk management system. So personally, no, I do not have any trades or open positions at the moment. And I will be awake though, or at least I'll try to track the event as closely as I can, because again, either way it goes, it's going to be a very, very, very important announcement. If there is no rate hike, then hey, we get to see the outcome of all of the hype fizzling and boiling down into nothing. And if there is a rate hike, of course, goes without saying, it's still a very, very, very big event. So yeah, once that phase is complete, possibly in an hour or two, or sooner or later, depending on how the price action shapes up, I'd be looking.
Okay, fantastic. I want just to also tell the viewers, we are talking today about the Bank of Japan, because there is a probability of an historic event, and so we love historic events because then a lot of actions happen. But this week, it's not the only interest rate decision that we are having this week. We are having this week, I counted 18 interest rate decisions all over the world this week. So we start tomorrow with the Bank of Japan, which will be the first one. Then we have Australia, we have Morocco. Those are tomorrow. Then we have on Wednesday, of course, the US. We have Brazil, we have Indonesia, we have Czech Republic, and we have Iceland. On Thursday, we have Bank of England, Swiss National Bank, Bank of Mexico, Turkish Central Bank, Norway Central Bank, so and Paraguay even. So those is Thursday, and on Friday we have Russia, Mongolia, and Colombia. So this is really a week packed with information, and yeah, so it's not only about the Bank of Japan. Of course, the Bank of Japan could enroll a tsunami and open a festival of huge moves, and that's why we're talking about the Bank of Japan. So I would like to come back to the Bank of Japan, and again, the possibilities there are just huge. We know something. Japan, they have a huge national debt. I think it's the biggest national debt in the world, bigger than Greece. And what will be the effect? Can they actually raise rates a lot, or is it just impossible because of the huge national debt? Dzhuneyt, what do you think about that?
In nominal terms, they have the highest debt in the world, but in real terms, it's not that scary because they have massive reserves to kind of offset that scary debt that they have. That's why I said they can increase interest rates. The debt cost will rise significantly. But that's why I'm not expecting they jump into rate hike cycle, so to cause that for themselves. I think that there will be once, I'll say once, but okay, let's say maybe maximum twice, they will increase interest rate to get rid from the negative rate hike, negative interest rates to zero or slightly positive, like 0.10 I see maximum. More than that will really surprise me, because they have huge debt. We see what's going on in USA. People are looking at the central bank decisions, but actually the reality is that the government is printing sufficient amount of money right now that traders are missing. That's why stock market is rallying. We have been discussing that multiple times also on the sessions. I don't think Japan will do that huge mistake to do into big rate hike cycle. The reason for that is the reason for global inflation. It's not coming from bank lending, so they can increase interest rates so much. In my opinion, US did, like, I will use mistake as a word. I don't know exact one that I can use, but maybe something like little bit mistake, attacking inflation with increase of interest rates, because they don't have any other tools. They try to gain some time to, while the government is focusing on reducing their spendings, or maybe stimulating some supply in the economy, like to fix that part, supply part. I don't see it much happening, and I don't think that Japan will do the mistake that US did, because the US debt cost will rise to so high level that it's surpassing the military spendings in USA. So my base case is that Japan will increase interest rate, will get it from zero, interest rates. I'm not sure that they will go for positive 0.10, let's say, but definitely I believe that they will go for 0, which is not going to increase so much their debt cost because, as I said, they have massive foreign investments and huge reserves, and which can play a good role for them. And I think that it's going to be a good thing to do to increase interest rates a little bit. And also, I know the new central banker, whether it's a bit more hawkish guy than the previous central banker, and probably they will do this one. But I don't think that they are scared from the increase of the debt cost if they don't decide to do a cycle, of course, which I don't expect.
Yeah. Okay, before I ask the same question, Krunal, we will do another small break here for commercial, and we will be right back.
Looking to enjoy free unlimited access to live education? Learn how to trade alongside our trading experts 5 days a week, 9 hours a day, simply by registering an account here with us. Start trading in a couple of minutes.
Hello traders, we are back, continuing talking about the possibility of an interest rate hike in Bank of Japan. By the way, I just want to mention that even though it seems to be clear, we are talking only about the possibility that they raise interest rates. There is no chance priced in of lowering interest rates. So it's about raising or keeping them the same. I asked Dzhuneyt before if he thinks that there could be a problem to continue to raise interest rates steadily because of the huge national debt. Krunal, what's your take here?
So I'm with Dzhuneyt on this one. I do feel that those are some solid points of theirs. The only concern or the only point that I'd like to also highlight is that Forex reserves for Japan have been reducing these past 2 or 3 periods. So while it is not a very significant number, or it's not a very dramatic decrease in reserves, it's certainly something that deserves our attention. And if that is to be, an indication for what lies ahead, I believe that might, in fact, even reduce how aggressive they could be with the interest rate decision. So again, I do feel that non-negative rates might be a possibility or are a possibility. Positive rates, I'm not really sure, 50-50 on that one, because again, the Forex reserves do paint a slightly concerning, at least beginnings of a picture. So I'd prefer to look at that. And I do believe that the officials over there as well would like to monitor the situation and really see how things progress before committing to, let's say, a hawkish interest rate cycle, or to put it in this way, bite off more that they can chew.
I understand. So, but by the way, just want to mention also here, we have the Swiss National Bank who had they were also in negative interest rates. Their inflation rose after COVID, maybe a little bit more than in Japan, but they raised quite aggressively from -75 to +1.75. So there is a significant increase. You're not talking about this kind of increase like the Swiss National Bank, right? Maybe Dzhuneyt, you can comment on that.
I don't expect aggressive rate hike cycle. As I said, they're the only one that to maintain ultra loose monetary policy. And I believe the large part of this because they very well know what causes the inflation. Plus, they have huge reserves to handle the weakening Japanese yen. At some point that it's good for the economy and became the levels that it's all not already good for the economy to have so weak currency. And that's why the reserves a little bit dropped down, because they started helping that with foreign currencies they have to not crush even more their currencies. So that's why we see that it's working. If they have huge reserves and they can use it anytime they see some turmoil, some drama on the markets, which is amazing to have in some major economy, not like Europe, for example, or the stress that in England happened with Liz Truss decisions that changed in one day. So they are not going to face something like this. They have huge reserves, but I don't expect they go for a rate hike cycle because their economy, it's not so great. Like it's moderately growing, it's all good. They were fighting deflation. Now they see some increase of inflation in 2024 and not so much in 2025. That's why I don't think there is necessarily increasing interest rates if the bank itself doesn't see risk of higher inflation in 2025. So definitely one or twice. I think twice is too much. One rate hike, it's there, but twice I will be also in the team of Krunal 50-50. Maybe if they do that, I'll say I'm not going to be surprised, but that's going to be the maximum that I can see.
So it seems that both of you are agreeing on that we will get 1-2. We see, you said the market is strongly expecting something to happen. That means if this is true, so it's priced in, right? Because what the market is expecting, it's normally priced in. So what I understand that you see actually more opportunities on the short, like on the yen on the short side, which means US dollar, Japanese yen long. That's what I understand, that there you both see actually stronger opportunities. Is this right, Krunal, maybe?
So that's certainly a inference that we can gather from here, but I'm not really sure if we could make that statement as a blanket. I do feel that ultimately it's price action that's going to dictate where the larger opportunity might lie. If we talk about the extent of the move that we're likely to see, I do believe that as a knee-jerk reaction, there might be more for the upside of dollar yen rather than downside. But again, if we talk about a larger sustained move, probably as a positional view, then I'm not really sure if that'll hold. But yeah, I mean, knee-jerk reactions at the end of the day, they're more about emotions. They're more about how expectations change and how traders have to quickly adapt to those changing expectations, rather than something that's more broad-based, or rather than something that's based more on the inherent qualities of the currencies.
So let's talk now specific. You wake up tomorrow morning, you are not awake in the middle of the night. They raise rates by 0.1%. What makes you... Sorry?
We missed all the move.
You missed all the move.
It's going to be a good drop, in my opinion.
Yeah, it could be, right? And that's the question. Is it too late? Or Krunal, what would you make go in? So what you are looking, do you have any indicators? How do you trade? How do you take a decision? You're waking up, you see the move, let's say we're at 144, they raise the interest rates by 0.1. What do you do there?
So at that stage, I'd like to see where I'm able to get a good risk reward entry. Because for me, ultimately, it's all about risk reward. If there is a large move, but then it's not giving me an entry where my risk is at a desirable level, I don't really see a value in taking that trade. Because ultimately, yes, it's a landmark event. Yes, it's going to be something that's possibly going to make big waves across the market. But then again, that does not directly mean that I must take a trade. So at the end of the day, I'll first wait for a good risk reward setup. To me, that would ideally look like some stabilization in price action and a beginning of a development in trend, because I wouldn't want to sort of surf an already rising tide. I'd rather wait for the waves to slowly form and then possibly look for entries either side. So I'm directionally agnostic, regardless of whether it goes down, continues going down, or if it actually reverses and goes up. I'm okay with either directions, as long as I'm able to get some sort of clues by price action, perhaps even understand whether it's overbought, oversold, what those things look like.
Okay. How about you, Dzhuneyt? You also said you are not awake. You get up in the morning, 0.1% interest rate hike. US dollar, Japanese yen is 144. What do you do?
And I'm rich.
You're rich. Okay, so you're positioned already.
I am having a sell position. Don't forget that I am a price action trader. If fundamentals are disagree with price action, I go with price action for the short period of time until they agree. I'm a price action trader, and what's cooking right now on the dollar Japanese chart is a huge potential head and shoulder, the way that I like to trade it. And there is a very good rejection from the previous level of support, which is acting as resistance for multiple sessions on 4-hour chart. And I have short, and it looks like very good start with a nice momentum short term. What I will do is, if I manage to secure the trade before the decisions, so if the price significantly drops down, like significantly means like 30, 50, 60 pips in my direction, I will secure my trade, and then I'm not trading the interest rate decision. I try to position myself before that, and if it works in my direction because the odds are in that, I'll be very happy to get it. If not, I'm closing the loss or the break even actually, and looking if I can join the bullish trend from no interest rates coming from Bank of Japan. And that trend will be, I think, short-lived, but it could move the price slightly high. If I can join, I will be happy to do that. If not, then I'll be waiting for the stronger reversal. Let's say that I woke up and the price is at 144. Because it's a price action, there's always a way to join the developing trend. My questions will be, if dust settle down, if there is some more emotions that can come in that instrument, so to kick me out unnecessarily, I will wait the dust settles down, and if that happens, I'm a long-term dollar Japanese yen seller. So because I miss the head of the fish, I'm not gonna get so disappointed. I'll try to rather get the body of it. So I'll try to join for the trend following and not for the trend reversal. Because trading right now with Bank of Japan for the rate hike, it's trying to trade the trend reversal dollar Japanese yen. So we would like to reverse the trend from being bullish so far. If I miss that point of trend reversal, then I'm starting trading trend continuational and trend follower, because I will believe, and I believe that if they increase interest rates, dollar Japanese yen is starting new journey, new trend. How big that's going to be will depend on the other major economies, let's say. But since I'm also expecting Fed to give hint for second half of this year that they will decrease interest rates, and market believe in that, even though less, I think that the new bearish trend it's going to kick in, and below 144, 45, 44 could be a great breakout of the major support, which could present a new trading sell opportunities.
So you say that you have already positions open.
Yes, right now.
Do you
it's already a small profit.
In this kind of event, do you put your stop loss tight or far away?
I'm mostly I'm a risk reward trader, and generally speaking, using a price action to enter, it's 70-80% of the time it's tight. It doesn't matter if it's event or not. But as I said, if I manage to lock or secure my trade before the event, that's my goal, to catch that intraday price action, because everybody is expecting Bank of Japan increasing interest rates, and probably this is going to start pricing in today. We're going to see more decline, and if I secure it, so I don't care about the rest. I'm not going to let this trade, because it's a bigger lot size to work on during the event with wide stop loss. Or I'm securing it, or I'm not in the trade.
Okay. Okay, so look, we covered a lot of topics. I think it will be very an interesting move that we will see tomorrow. Either way, probably we will see some volatility, because many traders are positioned on this side or on that side. We are coming already to the end of our session. Thank you so much for preparing our traders here for the possibilities and the probabilities, and hopefully traders, you, both of you, and the traders who are watching this session will make money tomorrow.
Thank you very much, Gil. Before we end the session, because we don't have sessions together, I wanted to know your opinion if Bank of Japan will increase interest rates today, just quickly. It's going to be interesting to discuss it also in the future. What's your take with a couple of words, if you can say, and we say bye to our viewers? And
so I think they will raise tomorrow or in April, and the future we will see. I think it's very uncertain, but it could be that they raise more than once. But again, because we see a couple of structural changes, so I leave it there.
Great.
Thanks so much. You were great expert. It was really a pleasure to listen to you. And to all the viewers also on social media, I want to invite you again, come to XM Live on the website. It's free, totally free. 8 hours on 3 different channels. We talk every hour about gold, about oil, about currency pairs. And I wished when I started to trade that there would be a service like that there. It would save me a lot of money. So join us. Thank you so much.
Thank you very much, guys. Thank you, Krunal. Thank you, Gil.
Thank you.
Bye-bye.
Thank you. Take care, everyone. See you all.
If you enjoyed this live show, you can watch many more for free. Head to xm.com, choose from a wide selection of educational sessions to improve your trading, learn more about us, and ask your questions in the live chat room. Join us every day in the XM Live beginner and advanced rooms from 7 a.m. to 4 p.m. GMT. See you there.
Can rise to greatness. Take it from one of the greatest of all time. Extraordinary stories are written with tenacity, patience, and passion.